So, hello everyone, good evening to all. We all know that on daily basis there are multiple changes, amendments in the income tax while filing the returns as government has started the return filing. So daily there are multiple things are there in income tax. So today we have CA Ankita Bothra to guide us on a very important topic, that is income tax return in a practical way. So Ankita is from basically Mumbai. She is a practicing chartered accountant and partner at Messrs. Jayakumar Jain and Company. Ankita has already trained more than 1,000 professionals across India, and today our term, because we all are going to get the knowledge about the income tax return filing. And yes, this session will be completely based on practical approach. Multiple things related to amendment, multiple things related to returns will be shared in this workshop. So don't wait, share this information with your friends as well so that they can also join the session and be a part of this knowledge enhancing session. I will not take much more time. I will just invite CA Ankita for the deliberation, and also at the end of session Ankita has certain important gift for all of you. So please be there till the last moment of session. So over to you.
So thank you so much, sir. So let's begin the topic. It's related to income tax returns. First, I will give you an overview, what we cover and what is the key takeaway from this session. So you all know that there are multiple changes in income tax form. That's why there are too much delayed government uploaded that form. So first, I will give you overview what we can cover and what will be the key takeaway for you. So first we understand common mistakes which will we do when you file your income tax return. So how can we rectify that and what is the mistakes? Next, overview of ITR filings, and next the most important part is changes in income tax forms. So what is the key changes in income tax form, especially for financial year 24-25? So it will be helpful to you for practically filing your income tax return. So first we understand common mistakes while filing your income tax return and how to avoid that. So first and foremost, the mistake we will done is not reporting all income. So there are possibility we are missing out some income. So that's why that is very important to understand that report all the income related to that particular person. Okay. And the next is wrong selection of ITR form, and the next missing deductions or TDS return. So I will give you a example one by one, and how to avoid that as well. So for that, not reporting or all income or under reporting income, that will be treated your income as your ITR form is invalid, and that will be that will be that will be incur huge penalty and late fee. Sorry, huge penalty and there are so much consequences on that. So first, how to report all the income, and you are not missed out any income. For that, you have to do one thing. You can go income tax portal. I will give you actually practical example as well. So, but first I will understand what I'm trying to say. That first, when you start filing your return, you can do one thing. Go to income tax portal using your login credentials, your user ID and password, and then download 26AS and AIS. That is very important. How to download, I can practically show as well. So download that form 26AS and AIS, and then what income you have which you want to declare. So match all these from 26AS and AIS. So it will be a very high chances that your all income will be that mistake will be totally avoid. If you follow this step, you can download these two documents, and that then match with all income which you are going to declare. So I hope you understand. I will practically also guide how to download 26AS and AIS as well. And next is wrong selection of ITR form. So there are ITR 1 to ITR 7 which will be applicable on different persons. So I will give you brief about that as well, which will be helpful for you when you start filing your return. If you choose wrong ITR form, then your return will be treated as invalid return. It means your return, if you can file, you already filed your return, then also your return will be treated as invalid. It means it as a law point that you are not file your return, and whatever consequences of late fee, penalty, much more will be applicable in your case. So that is very important. Choose correct ITR form. And there are chances you can miss your deductions, or also some TDS, and also check TDS detail. Sometime that deductor will deduct TDS on your end, but that is not showing in 26 AS. So it was always advisable that TDS will be also checked with your you have form 16A, 16, or from match with 26 AS. So I hope you understand importance of all these. Like there are chances it will be there are chances that it will be done, then it will be mistakes will commonly done by everyone. So that is, if you are keep take care of all these points, then you can reduce that mistake, and you are return your smooth and seamless, you can file your income tax return. So yeah, I can give you practical example how to download 26 AS and AIS. I hope you all know, but still I will give you a overview. So for that, you have to do just you can see the you can log in with your login ID password, and then you can download 26 AIS. Click on AIS, and then download all the related forms, and see the income annual information statement for the financial, from the financial year 24-25, same TIS for this financial year 24-25, and keep it with you. And then you can also go with 26 download 26 AS. For that you can go e-filing, then view form 26 AS, and click on that, and click on confirm button, and then you can go to click on I agree, then proceed. And so this way you can download your 26 AS form. You can see practically as well. It will be helpful for you. If you don't know about how to download, then that is the step. It will useful for you. So you can download it for you to using these steps. Select assessment year. So here assessment year is 25-26, and the previous year is 24-25. And a good news for you all that is the last year where we understand the concept of assessment year and previous year. From this tax year, we can say tax year, not assessment year and previous year. That is 25-26 is a tax year. There are no concept of assessment year and previous year from this financial year, that is 25-26. There is tax year only in income tax as well. So it will create it will create so confusion when you start filing return. There are some time we can go with assessment year, sometimes we can go with previous year. It will create confusion, but now this is add-on. It will be like useful for you for 25-26. There are no concept of assessment year and previous year. There are tax year only. So I hope you understand that, and how to download it. Next, I hope you understand what you do. You can do your login, and then you can download 26 AS and AIS when you start filing your return. I will give you just overview of ITRs. So basically, due date of filing income tax return for the financial year 24-25. Because of confusion of assessment year and previous year, I will put financial year everywhere in this particular webinar. So I hope you understand that. Financial year 24-25, the due date is 15th September 2025 for non-audit cases, and audit cases due date is 30 days after due date of tax audit. So what is the so you know what, that there are delay in non-audit cases due income tax return. So it quite possible, I'm not sure, but it quite possible that tax audit date will also extend. I don't know, but if it extend, so whatever tax audit date plus add 30 days, that is due date for audit cases. And once you start filing, so as I already tell you that choosing a right ITR form is very much important. So here I will give you a first example, that once you start filing, you have to choose ITR form applicable in your case. So ITR 1 and ITR 1 to ITR 4 for individual HUF. Especially it is for individual HUF. There are one exception, then partnership firm can also opt ITR 4. That is if that cover in 44 AD and 44 ADA, and that is presumptive taxation scheme. So what is that scheme? I will give you brief about that as well. But you can see that ITR 1 to ITR 4 is specially for individual and HUF. And there are only exception that sometime partnership firm can also go with ITR 4. Okay. And ITR 5 for partnership firm, LLP, AOP, BOI, etc. ITR 6 for companies, and ITR 7 for trust, political party. Basically, ITR 7 who want to claim exemption under section 11 can file income tax return under ITR 7. So it may be chances that some company that company NGO or register NGO companies, the company registered under section 8 of Companies Act can also for choose ITR 7 because they are NGOs, and also some AOP and BOI works on non-profit motive. They can and they can, if they are able to claim exemption under section 11, they are eligible for that, then they can choose ITR 7. So I hope you understand that. I can give you a brief about for how to choose your ITR form. So it will be helpful for you when you start filing your income tax return. So choose correct ITR form, and this is the head. For subhead, you have to understand for whom applicable ITR 1, whom applicable ITR 2, ITR 3, and ITR 4. So ITR 1 and ITR 2 especially for non-business cases, and ITR 3 and ITR 4 for business cases. So ITR 1, you know that 11th July, I mean to say yesterday only, ITR 2 and ITR 3 is live. Before and there, that also an Excel utility also only. There are no you still you are not file your income tax return ITR 2 or ITR 3 in online form. There are only Excel utility option available till now. So you can so for that you have to choose. So only yesterday only ITR 2 and ITR 3 utility Excel utility will come. So you know that the what is the reason behind of so much delay? So the main reason of that is there are so much changes in budget 2024 which implication in that financial year 24-25. That's why to incorporate all the changes and the major changes from ITR 2 and ITR 3, that's why the form will be very much delayed. But now it will take a few days more. Then you are able to file your ITR 2 and ITR 3 in online form as well. So I hope so. But that you have to understand that I will tell you that ITR 1 and ITR 2 for non-business cases, and ITR 3 and ITR 4 for business cases. So ITR 1 and ITR 4 is a quite simple form. There are no much, that form is like 1-2 pages form. That is easy. But ITR 2 and ITR 3, there are so much detail required. So if possible, if you are eligible for ITR 1 and ITR 4, then you can go with ITR 1 and ITR 4 only. And if not, then if you are non-business cases, then go ITR 4. I am talking about individual and HUF only. Okay. So then you can, so accordingly, if ITR 1 is not applicable, you are non-business case, then you can go for ITR 2. And similar way, if you are business person, business or profession person for individual and HUF, then ITR 4 is not applicable in your case, then you can go ITR 3. I hope you understand. And what is ITR 1 eligibility criteria? I'm just saying that I'm not covering that much detail in this course. And as the host says, like Mr. Sachin Jain says that, like, I will surprise for you. So you can wait till last. What is the surprise? So maybe you learn all these detail, but because that is time permits, I'm not sharing. I'm not able to do all the things, but I'm just saying that this is the overview. So what is eligibility criteria? Majorly, I'm saying like ITR 1 is applicable if your income is total income, considering all 5 heads of your income is up to 50 lakh, then you can choose ITR 1. And there are like you have only one house property, you have salary income, you have other sources of income, and there are big changes in ITR 1 and ITR 4 as well, especially for this financial year, which we will discuss in later. But I'm telling that is really important. So keep it till last. So but that is, if your income is up to 50 lakh, then you and you don't have business income, then you can choose ITR 1, and otherwise ITR 2. And ITR 3 especially for business and profession cases, they where the liability of where the liability of declare your all the balance sheet, like all financials, like trading, P&L, balance sheet, all the financial you have to put, and you have to mention all the details for ITR 3. And ITR 4 especially for presumptive taxation scheme, as we already discussed, that is 44 AD and 44 ADA. So that is, if it is applicable in your case, then there are eligibility criteria for that as well. So if it is applicable in your case, and that is applicable only resident individuals, HUF, and partnership firm. So, and based on their turnover and receipts criteria. So if it is applicable in your case, then you can choose ITR 4, and otherwise you can choose ITR 3. So I hope you understand that much. And so I can understand that you are able to choose your right ITR form for the using all these methods. Okay. Next is, especially for individual HUF cases, there are two different tax regime. So you know that for individual and HUF, there are slab wise system. Okay, and you all know that there are new tax regime is default tax regime, but there are one also so you, if you want to choose new old tax regime, then you have to fill one additional form. So yeah, you have to decide before start filing your return. You have to decide whether you go with the old tax regime, or whether you whether you go with new tax regime, that is default regime, and whether you are go with the old tax regime. So you have to decide based on that which is most suitable for you. And I can give you just overview that if you have, so if you have deductions and exemptions, more and more exemptions and deductions you claimed last year, like 24-25, if it is applicable deduction and exemption. And for that I will give you a for that you have to the best solution is, you can go to income tax calculator, and then you can that is available on dashboard of income tax portal. And then you can feed basic information like salary total income as per your old tax regime, as per your total income, considering what is the common deductions and exemptions. And what is common deduction and exemptions for both the regime, that is, if you have employer contributions and Agniveer corpus fund, and that is not majorly used actually. So what is all the major deductions and exemptions is available, only you can go with old tax regime. But there, in new tax regime, there are comparatively lower tax rate, and the slab is also higher side. So if you are check all these, go to income tax calculator and feed information your tax after deduction exemption, what is your receipt or your income, and what is deduction and exemption you can got in old tax regime. And then you can click on calculate tax, then you can get what is your tax as per new tax regime, and what is tax as your old as per old tax regime. So whatever most suitable in your case, you can choose that. So I hope you understand. This is specially for individual and HUF cases. So you can go that before start filing your return. So if you want to go with new tax regime, then you have to choose that. So for that, you have to first select if you are go first select which regime you want to go. And there are also few changes which we'll discuss in later part, but I can give you an overview in income in related to this. So for that you have to choose whether which regime you have to choose. And for the best way is, go to income tax portal and then income tax calculator and feed all basic information. Then you can get tax as per new tax regime and tax as per old tax regime. So whatever is most beneficial for you, you can choose that. Okay, so I can give you what common deductions like ATC, ATD. In ATC, you can claim up to 1.25 lakh. ATD is 25,000 plus 25,000. ATCCD 1B pension scheme 50,000. ATE for education loan. ATG for ATG for donations. So deductions on interest on home loan. So these all are available on that is deduction on interest on home loan for self-occupied property. So these all are deductions and exemptions. There are also HRA exemptions, which is major part for salaried employee. That is only available if you are off for old tax season. But for salaried employee, they have option for every year, whether you want for old tax regime or new tax regime, which is more suitable for you, you can opt that. But for business cases, you have to file one additional form, and there are few more restriction on business and profession part. But sorry, but for salaried employee, they can choose every year. So I hope you understand that you have to these the list of deductions. So whatever is in your case, you can create a list. Whatever deductions you already, whatever invest in ATC, if you are invest in ATC, if you have any medical insurance policy, if you have any life insurance policy, if you have an NPS, invest in NPS scheme, any interest on housing, interest on education loan, any donations. So you have to create a list of all the deductions which is applicable in your case, which you already done in financial year 24-25. Create a list for that. And same exemption list also create. What if you are salaried employee, then HRA, LTA, whatever applicable in your case, create a list, and then go to income tax calculator, and then your income before claiming exemptions and deductions, and then claiming exemption and deduction as per old tax regime, and then calculate tax. Then you can get that information, what is tax as per new tax regime, what is tax as per old tax regime. So that is will be helpful for you. So I hope you understand. Here also I can cover what is the common deductions and exemption which is applicable in both the cases. So you have to do this much, like calculate your total income. Then what you have to do, that you can that common deductions and exemption which is applicable in both the regime. For I'm talking about here is individual and HUF. So please keep it in mind and please go with flow. Don't so please go with flow. What I'm trying to say is that individual and HUF, and individual and HUF, for you have to come total all income, and then common deductions and exemption. So what is the common deductions and exemption which is applicable in both the regime? First is a deduction under section 80 double J double A, that is for new employee deductions in income tax act. Same and next is employer contribution on pension scheme, employer contribution on pension scheme under section 80 CCD2. And there are also limit 10% or 14%, like that only. And reduction on contribution of Agniveer Corpus Fund under section 80 CCH, and deduction on interest on let out property. So you have to say there are four deduction and exemptions. So you have to keep in mind that if these are in your case, then you can to your total income, then reduce these deductions and exemption, then you can get net income. That is, you can put in income tax calculator, and then you can deduction exemption and deductions under old tax regime, and based on that you can calculate tax as per new tax regime and tax as per old tax regime. So based on list of deduction and exemption which is applicable only on old tax regime and available on both the regime, go to income tax portal. See what I'm trying to say, that is all is over here. So I hope you understand how to I hope you understand that what you individual and HUF, which regime is more suitable for you. I will give you a total overview how to choose that, and also you can understand which ITR form is applicable in your case, and how to declare all the income. For that, you have to download AIS and 26 AS form and match all the information with these forms. So if you do all these things, then there are very high chances that you can file your income tax return in a proper way. There are very less chances any error will be left. According to me, I'm trying to say that is the case. So if you follow all the instructions, then there are chances of very high, then you can then you are able to file your income tax return smoothly without any error. Okay. So I hope you understand. And this is for individual and HUF, and individual and HUF. You know that a partnership firm has a fixed rate, and also company has fixed rate, and AOP has a different tax rates. So you have to, for that, I'm telling you about that. There are surprise. So please watch it till end so you can learn what is the tax rate for all these. So please wait till last. So maybe it will be helpful for you. Okay. Fine. I hope you enjoy the sessions. So if you have any query regarding that, yeah, if you have any doubt, so you can put in a comment box. Okay. So now that is most important and crucial part, which we will understand, that that income tax return form is one and the same in every year, but there are few changes. The reason of changes is amendment in finance bill. So this we are talked about year is financial year 24-25. So whatever changes in budget 2024, it will impact in this ITR form. So for that budget 2024 changes related to income tax will be implemented in income ITR forms in for and income tax return form for 24-25. So for that we have to understand that, because there are very high chances we can miss out, because this is special time related. You know what, that I hope you know that daily basis data is sorry, changes is very much important, because there are high chances on error on this part. So I will cover all the changes there I'm cover all changes in ITR form. And there's some part I will give practical example as well, because the remaining forms were delayed. So maybe I'm not covering that part, but I will give you a total overview. It will be helpful for you when you file your income tax return. So you can check. So please also share with your friends as well, if you really like this, and if you think that is important for you, and it will be a great impact, it will be create a great impact on, and it will smoothness and error free, you can file your income tax return. So without any delay we can start changes. So I'm already telling you that so based on changes in item form ready with additional details and documentation. So when you start filing your return, I will give you a basic step. What can you do? Download your 26AS and AIS, and then you can select which if you are indeed we are if you talked about, because the major part is indeed we are talked about is non-audit cases. Audit cases return is due in later, but we here majorly I'm talking about non-audit cases, that is individual and HUF return form. So for that this is for that we are already talked that you have to decide whether you go for, especially for business cases. Non-business cases, I mean to say we have to choose for both old tax regime versus new tax regime, but still there are some but for business cases we have some additional documentation and detail will require, which will be discussed in changes in ITR form as well. So for that you have to ready with download these 26AS and AIS, then choose for which slab you choose, and based on that start filing your return. And there are some basic document is required when you start filing your return, like bank statement, 26AS AIS. I'm already already told you about importance of 26AS and AIS. And then whatever income you are declared, the proof of that, and deduction exemption proof, because there are also changes in deductions and exemption part as well, which we will discuss. So that is important. So you can, so what is the changes? Based on changes, some additional details and documentation also require. So you have to understand changes in income tax return form, because there are so many changes in budget 2024. That's why the return ITR forms is delayed. So I hope that it is important, really important for you. So without any delay, we will begin. So changes in ITR form under financial year 24-25, expansion of eligibility to file ITR 1 and ITR 4. This year, the income tax department has exempted. So this is the important. As I told you that ITR 1 and ITR 4 is simplest ITR form. Okay. But you know that basic eligibility criteria, I'm already told you that ITR 1 for non-business cases, if your income is up to 50 lakh, then up to 50 lakh and you don't have business income, and if you don't have capital gain income as well. But there are some changes, and you don't have business income and don't have capital gain income. It means you have only salary income, income from other sources, and also income from other sources, and income from a house property. That is also you have only one house. So if you have more than one house, then you are not able to choose ITR 1. So if you are non-business cases, then you can choose, definitely you can choose ITR 2 only. So there are list of eligibility criteria for ITR 1. So based on that, if you are and if you are able to eligible to choose ITR 1, then there are some there are also there are changes in this ITR 1 also. The limit will be expanded, so there are so many person there which will be helpful for you, which will benefit for that. So change is that if you have only long term capital gain income, you don't have any short term capital gain income or any other income. So if you have only long term capital gain income up to 1.25 lakh, then you don't need to file ITR 2, ITR 3, whatever is your case. You have to choose. If rest of the eligibility criteria will meet, then you have only long term capital gain income up to 1.25 lakh for the equity shares and equity oriented mutual funds. So this is the thing. If you only have, because you know that after COVID there are so many person invest in mutual funds, share market, equity shares. So if you are the one and you are invest totally for investment purpose, not for short term investor, you are long term investor, then you can get benefited for that. So only up to 1.25 lakh equity shares and equity oriented mutual fund, then you are able to claim that 1.2, and then you are able to choose ITR 1. Similar way, ITR 4 for business cases, and there are also eligibility criteria. And also, if you are eligible for your income, eligible to claim your income, if you are eligible to claim your income in 44 AD, 44 ADA, so at that time only you can choose ITR 4. So I hope you understand. And ITR 4 also, earlier it was not allowed if you have any capital gain income. Even if you have a very minimal income of long term capital gain, you have to you have to go with ITR 3 only. Then the ITR 3 is a very lengthy form comparative to ITR 4, obviously. So if you have only long term capital gain income from equity shares and equity oriented mutual fund, then then you have to choose ITR 4 up to the limit of 1.25 lakh. So it is very big change. So if it is applicable in your client case, so it will beneficial for you. You can opt for ITR 1 and ITR 4. So I hope you understand that. And I am also saying this is for you can see that is for ITR 1. So here you can see that there is a ITR 1 form, and under exemptions column there are one more point added: income on which no tax payable under long term capital gain under section 112A for 112A, especially for equity share and equity oriented mutual fund. So this is the way you can see in ITR form as well. So I hope you understand that how it will impact it and how can you mention in ITR form. You can go in income tax ITR 1 or ITR 4. Then exemption column, there are one more exemption in list of exemption. One more list will be added, and you can select that and feed that information. So you are able to file ITR 1 and ITR 4. I hope you understand that and it will helpful for you. So next is you know that earlier if you have if you don't have Aadhaar number, you have enrollment ID, that is also acceptable. But after amendment, after the amendment in budget 2024, that there are removal of that. You don't able to file your income tax return if you don't have Aadhaar number. If you only have a enrollment ID, based on that you cannot able to file your return. So that is compulsory, you have Aadhaar number. That is also big change. If you don't have Aadhaar number, you have only enrollment ID, then you are not able to file your income tax return. So go get your Aadhaar number. Not only Aadhaar enrollment ID will work from financial year 24-25. It will. I hope you understand that as well. Next is, you know what, there is changes in ITR form in TDS section as well. So what is the changes? You know what, earlier it was not required. I'm practical example for that as well. So you can see in practical example. So you know that there are well, so you can see here the list of tax paid. Earlier it was not there complete list at under which section you have to choose. So here you can see that list is also mentioned. So for that amount is related to which section. So earlier it was not that, and but from this financial year 25, 24, 25, it is important, and you have to whatever income you declare, you have to also mention. Sorry, whatever TDS will be deducted, you have to go over there and choose section of DDS section, choose the DDS section as well. So it is compulsory, because there are so many chances, there are so many confusion. It may be you can declare on in some other way, and deduct in some other section. So it will quite chances. That's why government introduce more in this part. So I hope you understand that. Earlier it was not. You can if you compare with earlier idea form as well, so you understand that that is a big change as well. So you have to ready with all the idea sorry TDS form, will you will whatever deducted in your case, and match with that and proper mention section as well at the time of filing your return. So you have to ready with these information as well. Earlier it was not required. You don't want to mention that section respect to that income, but it was required now. So this is the where the key changes in capital gain taxation. This is the part is most important. Sorry. So this is the very important part. You have to understand that key changes in capital gain taxation. It will it's so many changes in capital gain. So please be focused over here. I hope. So here you can see that for long-term capital gain, for short-term capital gain, first you have to understand that based on holding period, we can decide whether it is long-term and whether it is short-term. So first, for listed asset like stocks, ETF, REIT. So long term, if held 12 years and more, there are no changes in listed asset on holding period. But there are some changes. But other than listed asset, there are changes. So if you have other than listed asset, like other than equity stocks and mutual funds and all, if you have property, gold, unlisted share, holding period is also changed. Earlier, before 23rd July, if you hold more than 36 months, then you that asset will be treated. If you hold more than 36 months, and after that you transfer that asset, then it is treated as a long-term capital asset. But now, if you but after 23rd on or after 23rd July, if you hold more than 24 months, then it is treated as long-term capital gain. So it will be comparatively beneficial for all other assets, but there are no changes in listed assets. So this is for holding period part. There are different dimensions in capital gain. First is holding period, then in taxation rate is also a big change. So you have to understand carefully and keep it mind very carefully. You know what, there are changes in 31st January 2020 related to that earlier long term capital gain is fully exempted. So that is also important. You have to rate so that date is also till now. We have if you are any asset that is you hold before 31st January 2020, then you have to also mention all record properly. I know that we have already recorded all the documents, but still you have to ready with, if you are, that is also important. And that is also historical date, that is 31st January 2020. Earlier it was long term capital gain is fully exempted. And one more important date, 23rd July 2024. So there are also historical date, there are also multiple changes in long term, short term. That time only long term will be a change, big change. Long term, earlier it was totally exempted, but after that taxable to some extent. So we have to understand about 23rd July, important of 23rd July 2024 in this session. So the holding period, that is changes. I hope you understand that. And now we can understand taxation part. Okay. So you can see that for listed and unlisted asset, there are changes in unlisted bonds and debentures as well. We will discuss in next slide. But I'm telling you that after unlisted bonds and debentures, on or after 23rd July, there are no need of check holding period. That is straight away treated as short-term capital gain. That is unlisted bonds and debenture. See, unlisted bonds and debenture transfer before 23rd July 2024 and holding period 36 months and more, then treated as long-term capital gain. Okay. So if treated as long-term capital gain, then taxation is different. But on or after 23rd July 2024, regardless of holding period, treated as short-term capital gain and taxed at individual slab rate. So you have to keep it mind related to unlisted bonds and debenture. So if you have unlisted bonds and debenture and you transferred on or after 20th July 2024, so there are so many changes in taxation part. So please ready with that when you start filing your return. And I hope you can accordingly pay advance tax as well. Okay. And the rest of the asset, except unlisted bonds and debentures, if holding period, based on holding period, but here we talk about on or after 23rd July. So there are changes in rate in on or after 23rd July and before 20. So what is the date of transfer? It is very much important. First, you have to, based on holding pay period, you have to decide whether your asset, transferred asset, is in long-term capital gain or short-term capital. If it is short-term capital gain, sorry, if it is a long-term capital gain, then you can see over here that based on your date of transfer, you can that the rate will be applicable in your case. Okay. So here we talk about before 23rd July. If you transfer, then listed equity share and equity funds, indexation benefit is not available and tax rate is 10%. For land and building, 20% tax rate and indexation benefit available. Unlisted shares, bonds, golds, 20% and indexation benefit available. Okay. But here, on or after 23rd July 2024, if you have a listed equity share and equity oriented mutual fund, then up to 1.25 lakh totally exempted. If you are only 1.25 lakh under section 112A for equity shares, listed equity share and equity oriented mutual funds, so 1.25 lakh, there are totally exempted, as we already discussed on ITR 1 and ITR 4 part as well. So 1.25 lakh, there are totally exempted. Okay. Tax on excess at 12.5%. So earlier it was a 10% and now it is 12.5%. Okay. So we will discuss. We are talk about on or after 23rd July 2024. What is the rate? Okay. And other than listed equity shares and mutual funds, 12.5 holding period we already discussed that 12.5% rate will be applicable. No indexation allowed. I mean to say that indexation is completely gone. I know there are one exceptions which we will discuss, but majorly it will gone. Indexation is not now is no more. So there are very huge impact on so many asset. There are so many. Maybe there are chances. There are chances that the huge losses. You have to pay more taxes comparatively. But still, what is the law? I will tell you something that only here. So there are no indexation benefit allowed. But there are one exception. What is the exception? I will, that this is special relief for property seller. If you are resident, individual or HUF, other than, first you have to resident, then you are only individual or an HUF, and then only land and building acquired before 23rd July 2024. So if it is applicable, then you have option. Either go 12.5% without indexation or 20% with indexation. Whatever is most beneficial for you, you can choose it. So please follow all the criteria. If it is applicable, then you can take benefit of indexation as well. This is the exception. So please keep it in mind when you file your income tax return and pay taxes on property transfer. Okay. So this is the thing. I hope you understand that what is the tax rate for on or after 23rd July. And before 23rd July, the rate is different. For land and building, 20% indexation allowed, and listed equity 10% indexation not allowed. So I hope you understand changes related to this. So this may increase tax liability for asset with the modest appreciation, because there are changes in rate. So, and indexation benefit is gone. So I hope you understand that is very big changes. And and what is the short term capital gain? So listed equity shares and listed equity oriented mutual fund holding period, holding period is less equal to less than 12 months, up to 12 months or below 12 months. So that is treated as a short term capital. More than 12 months, that is treated as a long term. So rest below 12 month, 12 month or below will be treated as a treated as a short term capital gain. Then then there are two rates. Okay, before 23rd July, rate is 15%, and on or after and on and after 23rd July 2024, rate is 20%. I hope you understand that. I hope you heard that as well. But you have to be ready with all the asset you transferred, especially in equity shares. You have to properly segregate before 23rd July, on and after 23rd July, ready with all the document related, getting from your demat account, and prepare a seat transfer before 23rd July on, and transfer on and after 23rd July. And based on that, you can feed all the, when you start filing your income tax return, then you have to feed, there are column for before 23rd July and on and after 23rd July. So you have to feed all the number rightly, and accordingly tax will be calculated. I hope you understand. I hope you importance of that. And other assets equal 24 months or below that. And earlier it was, obviously we understand, already we discussed long term capital gain. So which is not long term, that is short term capital asset. I hope you understand. And there are rate will be individual income tax slab. You know that rate will be if you short term capital gain, other assets, rate will be individual income tax slab. I hope you understand that. Now changes in buyback of share as well. So what is the change is like, if you have, if you so any buyback of assets, buyback of share during the year, then earlier it will treated as a your earlier it will be treated as a capital gain income. But now whatever will be received, it will be treated as your income from other sources. Suppose let's say you have a shares of somewhere around 10,000, and you buyback will be taken care, will taken by company in 15,000. Okay, so whatever the benefit, sorry, 15,000, so amount of 15,000 will be treated as your income from other sources income. I hope you understand that the cost is 10,000, but whatever you get from buyback price is 15,000 will be treated as your income from other sources 15,000. Okay, and what is and the 10,000 amount will be treated as a capital loss. And then that amount will be that amount will be long term capital loss, and you have to adjust in a future year for that. So this is the very big changes related to buyback as well. So total amount received from buyback is treated as your income from other sources, and the cost of that share is 10,000 is treated as a loss. You have to nullify that part 10,000, and that is you did not get any amount. 10,000 is totally 10,000 is your purchase price, and sale price 0. So that is long term capital loss, and you can carry forward and carry forward, and you can adjust from future years. So or in current year, whatever applicable. So I hope you understand the changes in buyback. And now we can talk about key changes in deductions and exemptions. So you know what? uh, Earlier you have to just write a number, what is whatever amount of deduction you want to claim. ATC limit is 1.5 lakh. I know, I hope you know that. So you have to just write numbers like you have to write 1.5 lakh, 1.6 lakh, and the maximum limit is 1.5 lakh. But now you have to mention some additional details every so if you are saying that you have some LIC policy, so you have to see there are lists. We will discuss it. So there are list, what is the exactly required. So detail and action required. And earlier it was easy. Old regime since the new regime is now the default, you must explicitly opt for old tax regime to claim most reductions. ATCC, we already discussed that. And more granular data is required to curb false claim and improve transparency. So I hope you understand that. So what is additional details and for deductions and exemption require, we will discuss see once. Okay. So if you are a salaried employee and if you get HRA, then for HRA exemptions, you have to allow, now you have, earlier you can just put a figure. That's it. That's not required any additional requirement. But now when you want to claim HRA, then you have to mention place of work, basic salary, actual HRA received, rent paid. So you have to feed all the form, all the detail, and you have to ready with all the detail when you file your income tax return yourself, or your any pro your and yourself, you can file your return, or you can file with any profession. So you have ready with all the details. So you have to mention all the details to you you have to ready with all these details. Similar way, if you have a long home loan interest, so loan source, account number, sanction date, outstanding amount, these all are the information for each ATC investment, policy ID, eligible amount for ATCCD 1B for PRAN number, that is for NPS scheme, if you have a PRAN number, contribution details for health insurance, insurer name, policy number, premium paid. For this is also changes in disability. Yeah, for disability, you have to file one additional form before filing your return. If you want to claim deduction under section 80DD or 80U, you have to file one form, form 10IA for and you can get an acknowledgement number. So when you claim for disability deductions, then you have to feed that acknowledgement number. So this is the all information required for 80DDB. So this is very important for 80DD and 80U, especially for that you can keep it in mind. You have to file one more additional form. So one more additional form and acknowledgement number required, similar to 10 IAE for opt out of new tax regime. So that is also 10 IA for disability deductions. Education loan, you have to mention with loan source, sanction date, outstanding balance, and home loan interest. So you can see that is the list of the additional reporting required. So I hope you understand that these all are the key changes in ITR forms. So so I hope you get all the points, and you are able to cover all these information, and it will be fruitful for you if you are keep it mind and follow these instruction. So it will helpful for you, and you can get enough benefits of it, and there are very much chances that you can file your return error free and smoothless. But if you want to learn practically, from scratch, from scratch, like related to all that with all the basic information and also practical guidance on all income tax return forms, ITR 1, ITR 2, ITR 3, ITR 4, ITR 5, ITR 6, and ITR 7, all the ITR form. If you want to learn practically, then we have already launched a course, ITR returns and assessments, which will be available on our website. And if you want to join, then you can connect with us. You can connect with us. We can share the link and create a WhatsApp group. And if you have any query over there in related to course, so and if you want to any query related to course, so you can connect with us through mail through mail and through and joining with the link provided by us. And if you join that, we can create a WhatsApp group where we update daily basis what is the changes, and whatever any query from your side, we will conduct a live session for all the queries. And also we can you can put in a WhatsApp group as well, so we will definitely solve all your query. So it will be great helpful for you. This is available in very nominal case, so very nominal price. So if you want to take benefit of it, then you can enroll for that course. Thank you so much, friends. I hope you enjoy the session.